What's going on, everyone? It is February 20th, 2021. We are back. Crazy week. So it's good to be back here with you guys. Let's go ahead and jump right in and start talking about what's been happening. All right, so the narrative this week has been all about the 10-year yield going up, risk related to stocks. Is the market going to crash? Everywhere you look, this is what's being told. And you know our MO here is that whatever it is that is being said and being said everywhere, more often than not seems to be wrong. Now, again, before we further dive into things, let's go ahead and say that this is not any sort of market advice. I'm not providing you any guidance. Do not listen to what I have to say. Enjoy it purely for entertainment. And more often than not, I'm entirely wrong. Now, with that out of the way, the backdrop having been set, taking a look here first, let's start with the 10-year yield. Okay, this is the bond, the 10-year treasury. You can see what's happened here this week. All right, shortened week, February 16th. We had a big move here down lower. And let's look back here on a one-year chart. What you can see here is this move lower here on February 16th was now a new low being set here relative to all the way going back to the pandemic in March of 2020. So we had a move lower, all right, and associated with that, we've had some pressure here in the market. And then here on Thursday and Friday, again, a little bit more move lower in the bonds, aka yields going up, and the narrative being that inflation is back, which it's been here. And this is going to lead to a crash in the market. Now let's take a look at what's actually been happening then in the market itself. So if that were the true narrative, yeah, we had some pressure. Yeah, we had some moves lower. But how well of a job was that actually being performed with respect to the market moving lower? I would say very poorly. We had a pretty big move up off of here, that touch on the 50-day moving average back on January 29th, where we had a few weeks of relentless upward movement. Having some consolidation here is perfectly normal. And if this truly were the crash, if this truly were the big one, that because the bonds and the yields have risen, this is a very poor job of the market showing us that. So my impression going into the upcoming week is that it's not necessarily yet that the market may go lower. Obviously, I may be wrong, but I think that time may come, and it may be, again, as we have said before, a swift move lower and quickly recovered, because that's been the MO here of the market. But I just don't see that happening. So if you look here in the SPY, what we've been doing from that move up from the 50-day moving average on January 29th, we've really just been consolidating. Okay, we have not even come down and touched the 20-day simple moving average. The NASDAQ, this has been weaker, okay? But what you can see here is that we've had a perfect touch right down to the 20-day simple moving average on February 18th. A bit of a rally, but then Friday there was pressure. Now, what was another issue that was happening on Friday? It was the February option expiry. What else has been happening? The market has tremendously high skew with respect to many more calls being purchased than puts. What is the market going to do? Is it going to let everyone have these calls expire in the money, or are they going to try to burn all of that premium and push the market lower just to get all of that premium out and have all calls expire worthless? I believe that's really what was happening. I'm not really seeing anything here that was indicative of true selling yet, until we talk about Amazon. And Amazon, the bane of my existence, and we'll get to that. Let's look at the marker of the market and risk on or risk off, the Russell. Look at the IWM, okay? We have had some consolidation here for about a week at its all-time highs, a pullback, which couldn't even get to the 20-day simple moving average on February 18th. And Friday, in the midst of bonds and yields going higher, right? The concern that these companies are going to all of a sudden have issues with repaying their debt if interest rates are going to be higher. Yet the companies at greatest risk, being in the IWM or Russell, the market itself was up 2% in the IWM on Friday. It couldn't even get down to the 20-day simple moving average. It stopped just above it, and now it's rallying up. I think we keep an eye on this. The IWM, I feel, is going to be the true marker here of how the market may be moving forward here in the next couple of weeks. Now, on top of all of this, what is one additional layer is that in the midst of all of the January GameStop madness, hedge fund liquidation, if you look at the performance of the majority of hedge funds, which have historically outperformed, they were tremendously negative. So they had a terrible January. So what is the hedge fund industry going to do? They need to find a way to get positive. So could they have been running things up here early in the month and trying to gain some returns? Certainly. And we just need to keep that in our minds and in the backdrop, because at some point, what they may try doing is capitalizing on the upward momentum and frenzy and then pulling the rug on us. But in the midst of this poor selling that was happening this week, with all of the backdrop and the news and everyone talking about the market going lower because of the bonds, I personally don't see that as yet being the case. What I'm going to look for is another push higher, back up to and or above all-time highs. I feel they need to have another push such that it's going to really pull all of us out here in retail right back in, and then we may get the rug pulled on us. So let's take a look at what's been happening with metals. We don't really talk about metals much, but gold is just absolutely getting hammered. You can see here, GLD, nothing really here to say. Dollar, this has been moving higher here in the past few weeks, so gold has been moving lower in tandem to that. Let's take a look at Bitcoin. We don't really talk about Bitcoin here much, but this is just incredibly strong and moving upward. Bitcoin is interesting. I haven't heard anyone or anywhere where you could truly short Bitcoin, and to me it looks as if there's only one direction for this, and that's only buying pressure. Now you have institutions, you have Tesla, everyone talking about how they're putting some cash here in Bitcoin. Path of least resistance is upward. I don't see anything here that would stop this from going to 100,000, 150,000, 500,000. These are preposterous claims. What is this that would be going to that? I don't see Bitcoin necessarily as being a currency, especially in something that's moving so volatile. But as far as a trading instrument and making money, it's there. And in my opinion, I think it's only going to go higher. And how much higher? This is like GameStop. The sky is the limit. Unless someone pulls the plug and says you can't buy this anymore, I think this is just going to continue moving upwards. Let's take a look here at Facebook. Facebook on Friday, big move lower. And this is despite having had, going back into February, really several weeks of just upward pressure. And then bam, on Friday, they took it all out. So everyone who was buying calls in Facebook, they got wiped out on Friday with this big move lower. You know, FANG just been chopping around in range. We've been saying that for several weeks. Facebook is no different. And overall, what I would say across the board is I wouldn't be really looking at anything until we get a better picture of what it is the market wants to do. Facebook, this looks as if it's just going sideways here, again in this big range, not looking at anything there. Apple, interestingly, looks very weak. So we've had this push to all-time highs, and that has been sold. And we've had a bear flag and then another move lower. Now, if you take a look at this, Apple is now having several days below its 50-day simple moving average. What I would look at is 132 on Apple. If we see that strength in the Russell, and Apple is essentially the stock market, if we see Apple reclaim 132, I think that there's going to be quite a bit of buying pressure that's going to be starting in Apple, and then the cycle is going to continue where then we see the market moving higher. Netflix is consolidating here, and it doesn't look very clean whatsoever. Again, we had in February several weeks up, and then bam, we had a move lower to burn everyone who was buying calls. Nothing here that I'm seeing in Netflix directionally. Amazon, what do you say about Amazon? I think this is going to end up being in the do not look at, do not trade list, because there's no way you can get any sort of direction with this. Amazon had a pullback to the 20, just as it looked as if we were starting to reclaim that. In mid-February, we had a few days where we were moving up. There was some notable call buying that was happening on Thursday in Amazon. Yet what happens on Friday? Amazon just gets flushed, down 2.3%. This looks as if it is a bearish engulfing candle. And my opinion here then is neutral on Amazon to bearish. Now, again, this could be completely wrong, and hopefully it is, considering that I am long Amazon. But this doesn't look very promising. Now, if what we can do is we can reclaim here in Amazon 33.40 to 33.50, then we may have a chance to push higher. But I would have zero confidence in a true push higher happening in Amazon, because we're going back until August of last year, and every single breakout has been false. This is on the backdrop of Amazon having tremendous earnings, which clearly doesn't matter. Jeff Bezos stepping down, which may be something that people are looking at negatively. However, I think ultimately it's going to be positive for the stock, because whoever it is who may be coming in, just as when Tim Cook took over in Apple, he strongly instituted a process of stock buybacks and prioritizing the finances of the company. That could very well happen with Amazon. All of a sudden you see Amazon split here in the winter. All of a sudden you see Amazon just moving even higher for the next several years. Certainly I feel is there, and it's a possibility. I also think that with Amazon there's an inverse correlation with Shopify. So look at Shopify, SHOP. This had earnings here this week. Its earnings were looked at negatively. It had a pretty significant move lower, but that move lower was bought right back up. And take a look here on Friday. So Amazon was moving lower. Shop was moving higher. And going back here for several months, I feel this has actually been the MO and the trend. So Shop and Amazon appear to be inverted. And to me, Shop looks strong. Shop's also been picked up by ARK Investments when you get your nightly newsletter from them, which you can sign up on their website. Shop's moving higher, and this looks strong, so I would stay bullish on Shop. What else would I be bullish on? Nvidia, you guys know I'm bullish on Nvidia. I feel that Nvidia has a lot of potential to move higher. Now, they're going to report earnings here early next week. It's hard to say what it is that's going to happen. That's always a toss-up. They did come out with some news recently that they're going to nerf the cryptocurrency mining with some of their GPUs. But what are they going to do in response to that? They're going to introduce a separate new product that's going to be dedicated to mining crypto. So what is that going to mean? It's just going to mean a second generation of income on the GPUs for them, which can only lead to positivity. So hopefully we get more news on that here in the earnings release, and they touch on that with the price of Bitcoin, with all coins essentially moving higher. I think that that's going to be a catalyst for Nvidia to go even further. And again, you guys know when I've been looking at this from about 450 to 600, so 150 points wide has been the consolidation going back to August of last year. So 600, I would say, plus another 150, somewhere around the 750 range. That's what I would target for Nvidia on the upside. Google had great earnings. This is consolidating nicely here at its new all-time highs. In the midst of that weakness in the NASDAQ coming down to touch the 20, Google is having none of it. It's staying up here. And with Google staying up, I think the market also is going to stay up. What else is staying up? Microsoft. You can see here Microsoft had a beautiful move higher and quite a lengthy consolidation. The 20-day simple moving average is catching up, so we are ultimately going to consolidate with time, as well as here with the price. And I feel that with Microsoft staying up here, that's another catalyst for the market to stay strong. This is a big component of the market, and to keep it higher. Now, Microsoft, I would say, is the most likely potential play that we could be looking at for collecting some premium. You could see that essentially going back into all of February, we've been anywhere from 240 to 246. So let's take a look at about 2 weeks out. If we wanted to sell an iron condor on Microsoft, so if we sold the 250 call, and let's just say we're going to go $5 wide. So if we sold the 250 call for March 5th, we bought the 255 call. If we sold the 240 put and we bought the 235 put, that would net you $2.30 of credit. To me, that's not bad. You're risking $5 minus $2.30, or about $3.70. So your risk is greater than the credit you're going to collect, which is less than ideal. But what Microsoft has shown is that it appears to be just chopping around here in this range. And again, you're not looking to collect all of that. You just want to get a piece of it. You get 50 cents, you get 75 cents. That's perfectly fine. You put on decent size, and then all of a sudden a 5 lot, a 10 lot ends up being a pretty nice winner out of that. What about Tesla? Tesla here, this looks a little bit weak. I would be a little bit concerned here with Tesla. It's consolidating here just on its 50-day simple moving average. And there was a little bit of buying pressure off of that. Even ARK Investments, they were divesting some of their shares for several weeks. And then all of a sudden, once we got down to the 50, they were a net buyer again. So what does that mean? Institutions are here looking at that 50 as a support point for Tesla. Hopefully we can stay above that, which is 760. If we can stay above that, we see the market start to pick up and turn around. I think that Tesla is going to make another move back up into this big area of congestion or consolidation right around the 850 level. And if we can get back into that area, I'm going to be looking to collect some premium there. AMD is weak. Not even going to mess with it. Now, what else has been happening with these yields, which are going higher? Financials have been incredibly strong. So take a look here at Goldman Sachs. What we've had is a soft pullback from its all-time highs and then another push higher. So nothing here whatsoever that's looking bearish on the financials. If this narrative, if these yields remain high, then financials are going to stay up. What else are the financials going to do? They're going to support the market and keep it from ever moving lower. They can't have a full-scale flush in the market and then see the financials being so strong. So this is just an ebb and flow rotation of money going from tech into financials. What we may end up seeing is that yield starts decreasing, money coming out of financials and then going back into tech. And it's just this push-pull that's going to be happening. If we see that, that's healthy. That's perfectly fine. Let's take a look at some other names on the list. So FUBO, this is one that now that I'm a FUBO subscriber, despite initially talking bad upon it, I'm starting to warm up on it. Now that just may be mentally consolidating with time, with the interface, kind of like the market and what it needs to do. But FUBO doesn't look in any way here as if there's much happening. And we could always look at that as an opportunity. I think that looking at collecting some premium anywhere here from 40 to 50 in FUBO looks as a decent possibility. JMIA has had quite a pullback. Now, this is not in any way bearish. This is nothing here that I would be looking at negatively. JMIA is set to report earnings here in the near future, and the earnings may not be ideal. This is a company that has a lot of potential growth in the future, looks to be something that could move quite a bit higher in the future. But oftentimes what these things want to do is move lower, rinse out the weak hands, and what that's going to do is it's going to represent an opportunity for us. So if we can have JMIA moving lower, below 50, or at 50 approximately on their earnings, let's say, that's going to be a great opportunity to look at this as a buy. And then we look to see, are there truly people out there who want to have this stock? If so, that was its breakout point. And we know that JMIA going back 50 was its breakout point several years ago, where it tried to reach and then it pulled back from there. So as long as we stay above 50 in JMIA, I think that's going to be a strong point where we're going to be looking to add shares, options, whatever it is that you may like. Corsair, they had earnings. The earnings weren't bad, but the market didn't like it. It's pulled back and it's just consolidating here on its 50-day simple moving average. As long as we can stay here, then I think that we're okay. Ultimately, I feel Corsair is going to have a leg higher. SKLZ, ever since they announced their news with the NFL, they had a beautiful move higher, a lot of momentum behind this, a lot of short-term traders, and everyone here has gotten rinsed out. But what we're finding here is that this 35 level is showing a nice support. So SKLZ has not been able to fill this gap from that news that came out about the NFL. And that looks quite bullish to me. As long as we're going to be staying above 35, to me, skills, and especially at this point of 35.94, this looks as if it's a decent point to be adding positions. And the risk-reward profile here, I think, is high. If the market stays strong, we stay above 35 in skills, I think that there's a nice move that we could have back into the 40s. Clearly, you have a nice stop you could set at 32, and you know you're either right or you're wrong. What about SPCE? So SpaceX, pretty interesting. Every weekend that they're proposing that they're going to be performing a launch, that the market moves higher. And then if news comes out that a launch is canceled, then SpaceX is moving lower. But what we're finding here is that we've had a pretty significant move up here in January and February. We've had a pullback here to the 20-day simple moving average, and we're finding here support in this 50 level. As long as SpaceX or SPCE stays above 50, then to me this looks as if it's going to remain strong. But there's quite a bit of premium and volatility out here. So I actually like SPCE for selling premium around this $50 to $55 range, selling iron flies, and looking to see if we can collect that premium. NEO has looked a little bit weak, right? It's had a pullback, come down to its 50. There were some buyers, but we're still hovering around that. So I would say that it's still early here in NEO. I wouldn't be looking to add because this could very likely break below here 54, which is its 50-day simple moving average. Really, I would be looking at NEO in the low 40s as being a potential add point. Pinterest, news has come out of Microsoft being interested in them. That's led it to move higher into the mid-80s. This is despite a move lower on its tremendous earnings and significant potential future growth. What we're doing right now is we're consolidating above here its all-time highs of prior all-time highs on earnings, which were in the mid-80s. We had a move higher on that news of Microsoft, and then we're still staying above that. So I feel if we're going to stay above 82, 83 in Pinterest, that this is one that actually we could be looking at in staying long. DraftKings, DKNG, what you find here with these online betting companies, which you guys know how I felt about that. Seems as if there's a lot of potential growth for these in the future. This pulled down to its 20-day simple moving average, looked below that. Buyers stepped right back in, and it's had a really nice bounce up above that. And to me, this looks as if it's only going to move higher. DraftKings is a long, and it's something that is strong. ROKU had earnings, really nice earnings, and this is consolidating here in an area of its prior all-time highs. It's had quite a move up. So at some point, what ROKU is going to need to do is it's going to need to go sideways. And the advantage of something like ROKU is that there's quite a bit of volatility here in it. So it's going to present opportunity. So let's see if here in this, let's say 475 level, ROKU can start to go sideways. At that point, then I would be looking at potentially collecting some premium on that. What about PLTR? PLTR had earnings. Their lockup period has now expired. There was quite a bit of support here at that 25 level of buying for PLTR, and now we've had a move higher, 15% up on Friday. I think as a long term, this is a buy, but this may just be short-term traders. I would be really careful with this move because I've seen this story play out where you have this false breakout, false move higher, and PLTR is quite notorious for doing that. So what may end up happening is that we've come up to the 50-day simple moving average. We've closed just above it. Let's see if we can gain some traction above here. So if we can gain some traction above 29, then we could say, okay, yeah, there's a potential for us to start to move higher. But if we see that this is rejected at the 29 level and then starts drifting lower, I would be cautious. Really, I would say that right now, we just got to keep an eye on this. This could turn into some momentum and then there's a play. But right now, that may be something that's a false breakout. Let's take a look at the trade desk, TTD. So this had earnings, great earnings. And what's happened with the trade desk is we've had, going back to December, we've had this long area of consolidation. On Friday, after their earnings report, there was a huge pop. And what we've done is we've broken above that consolidation area, which was right around 875 to 880. And if you take a look at this bar going back on December 28th, huge red candle. So a lot of sellers here who are short, a lot of people who are closing out positions. So there's really not much resistance that's up here. So to me, getting back into 950 or so in the trade desk certainly looks a possibility. What about CCIV? So CCIV, you know what this has been all about. Lucid Motors apparently has inked the deal tentatively, and the momentum came in when that news was being announced. Huge push higher, and then on Friday, quite a bit of a move lower back into the 50s. So let's take a look at the implied volatility in CCIV. So what you can see here is significantly elevated. 270% going out into March. So if you look at the 50 strike calls and puts, they're pricing at about $16 to $15 each. I think there's opportunity here. Going out into 27 days, what's may ending up happening is that the volatility will need to collapse here in this. So if we look out 27 days, and let's just look at an iron fly at the 50 strike. And with it being about $15 on the call and the put side, let's see what would happen if we go out $20. So let's look at selling the 50 strike call, buying the 70 call, selling the 50 strike put, buying the 30 strike put. So that's $15 of credit with about a $450 risk. That's reasonable. Let's look at the full width, or about $30. So if you sold the 50 strike call, you bought the 80 strike call, sold the 50 strike put, and you bought the 20 strike put, that's $20 in credit. So you are taking a bit more risk, so that's 2 to 1. Versus here, if you're going to set it at 70 for the cap of your iron fly and 30 on the put side, so that's going to be a 3 to 1 risk. I kind of like that better. So this is something I'm actually going to save. We have now 27 days until that expires. We're not going to be looking to collect all of that credit, but certainly with something with 270% implied volatility, there may be opportunity here, especially with this showing that it may want to just consolidate here in the 50s, that's going to be one that I'm going to be looking at. So with that, that's everything I have for you guys.